Thank you, Clive, and I think that probably sets me off on the right point, because I think essentially what's happened is over time it's moved from the perspective of managing the bank's risk to managing the customer's risk. But I suppose first a little bit about Lloyds TSB's commercial business. We're vast. We have over 1 million small and medium-sized enterprise customers across the UK. That can mean everything from a brand new sole trader startup right the way through to an established company with a turnover of up to £15 million per annum. I would just say my team covers the entire of the bank's wholesale activities, so we continue supporting customers up beyond that level. But today I'm going to talk mostly about the work we do within the commercial space. Clearly we cover all sectors of the UK economy. We've got a particularly large charity and social enterprise organisation, and we have a charter for small businesses underlying our support for SME customers through the cycle, and we've also signed up to the government's funding for lending scheme. We were the first bank to do so, and essentially that amounts to about a 1% reduction in the loan rate that's available to eligible customers. The Environmental Risk Team was formed in 1996 in response to the Environment Act and Part 2A of the Environmental Protection Act. And as Clive said, essentially our concern at that point was, are we going to be liable? And I think over time we've become a lot more sophisticated about the range of risks we manage and our response to that risk. And therefore we've moved from focusing solely on contaminated land in the first instance to covering the entire of the wholesale bank, and moving on from a customer who has a site that is contaminated or is undertaking an activity that may cause site contamination, through to understanding at the higher turnover end an entire of the customer's environmental management policy, process and outputs. There are 4 of us. Joy is sat toward the back of the room. We're spaced between London and Birmingham. And we see an input of around 7,000 transactions a year, which was one of the key reasons for developing our new automated environmental risk screening system. Otherwise, we simply would not be able to cope with the paperwork. We'd be destroying rainforests. So thinking about the mechanism that we use for that, the first thing is that we have a robust policy. The bank has a policy that says that all lending within the commercial business over a threshold needs to come into the team for us to review, and that even outside of that threshold, if there's any transactional documentation for a particular deal that indicates there may be environmental concerns, so the presence of a site check or a former environmental report, or even just comments in an evaluation report, we'd also bring that in to take a look at it. The environmental risk needs to be considered as part of the credit approval process as well. So before the loan can be drawn down, someone needs to attest to the fact that this has been undertaken. So what happens is, in the first instance, we have an initial transaction screening. That happens on our online system, and the system takes a look at, among other things, the risk, so I suppose house view of the risks associated with the sector, and then the transactions that are considered higher risk will come in for us to review manually. Otherwise they'll be approved through to the end. Otherwise, if something comes into us, we will undertake a detailed review in-house. That may take sometimes a matter of minutes, sometimes a matter of hours or days, depending on the level of information and the complexity of the transaction. And we will then, where necessary, if we have gaps in the environmental due diligence that we would expect, we will send it out to one of our panel consultants for them to undertake whatever we would feel is the proportionate level of EDD. So whether that be review of existing documentation through to commissioning fresh environmental due diligence. And again, that's a staged process. So I wasn't here this morning, but I'm taking from some of the speaking notes that the challenges are understanding the level of remediation, the level of documentation that's required in any scenario. We'll progress on a step-by-step basis. And I think those strong external partnerships help us in terms of bringing our knowledge up, both through transactional and also just general awareness, and meaning that we know that we can hand off to partners where we need to. But we've also got support mechanisms. So this is what I was talking about in terms of assisting our customers. We've produced 2 key sets of briefings. The first are sector briefings. These are for internal use, and they allow our lending managers to understand, again, our house view of what the existing risks are within a sector, what best practice looks like in addressing those risks and managing them, and also how we believe that risk may change over time. So what's the forward-looking view for risks within a particular sector? The second are legislation briefings. These have been produced for external circulation, so relationship managers can give these to their clients. And again, they're primarily aimed at that SME sector where our experience is that customers are focusing on running their business and may miss the nuances of environmental legislation and therefore the sector brief, or the legislation briefings, say, what is the legislation? Does it apply to me? And if it applies to me, what do I need to do, and what might happen if I don't do something? So they're designed to be very simple and signpost the way to further advice and guidance, but to make sure that in a transaction, if we come up against a customer who has exposure to a particular sector and we believe is likely to be impacted by a piece of legislation, we've got a piece of collateral we can give to them that says, look, here is how we ensure that you and I both have the same understanding of this piece of legislation. We also do a lot of training internally. We're out on the road quite regularly, meeting with our relationship managers, talking to them both about policy and process, but also about how we can support clients, how we can help them to support clients. And the overall mechanisms and everything that I'm talking to you about today has come about simply through asking people how we can do things better and listening to that. As an example, sector briefings, we are very big in the agriculture space. We've got a lot of very good clients in that space, and therefore we've produced an environmental risk in agriculture guide. The idea here is that both relationship managers, and there's also client sections of this, can understand their sector better, can understand what best practice looks like, but it's guidance, it's not risk appetite. So we recognise that this may change, that we can update this quite frequently, and therefore whilst you want policy to stay static, what's best practice in a sector will change. And therefore, as I say, these document key controls, so we have around 20 of these covering the UK economy. They're in the order of about perhaps half a dozen to a dozen pages long each, and they've got a section on forward-looking section on emerging risks. So what do we see? Either stakeholder demands, so we'd already talked about the fact that legislation will slowly change to reflect what society deems acceptable, and also the sort of stakeholder piece. And then the legislative piece, they support what we call our trusted advisor strategy, so knowing our customers, knowing their businesses, being able to talk to them about those, and whether the legislation applies. Again, we have around a dozen of these which are in circulation, and when we come across new legislation that we think needs explaining, we'll produce a new briefing. And they do, I think they sharpen thinking a little bit because they have information on penalties for non-compliance. So clearly when we're talking to a customer about these and they've got six-figure sums in the bottom, that gets people talking. So what does a normal transaction look like? Well, there are 7,000 of them each year, but nonetheless, the risks vary considerably. Some transactions will be processed automatically by the system, others will take probably months from end to end, or even we can come into a scenario and have, say, a phased drawdown whereby we allow some money out of the door now, and then we will continue to monitor the progress of, say, a site remediation that we've lent against, and therefore allow drawdown of further tranches of funding as milestones are met. Within the commercial space here, clearly the principal security is property. Now, sometimes that may be a residential property. I think we can treat the risk slightly differently there. But if it's commercial property that we're taking as security, we're looking at two things. One is current and future use. What's the customer intending to do with the asset? That gives us a feel for the likelihood of future contamination. So clearly we will ask questions about what controls they have in place or plan to put in place and their experience. But also, and I think with reference to Landmark here, historic use is a significant factor and something that we try very hard to get a handle on because it can have a significant implication for what otherwise may look like a benign site. I think from our perspective, valuation reports are not a risk transfer mechanism. It's not full liability or for environmental issues, but they can contain substantial information if approached correctly. So clearly we read them, we're looking for certain signs, things like the photographs of the site and also in what is written, to enable us to understand whether we would want to go further with commissioning environmental due diligence on a particular site. One of the issues we consistently deal with is property that's brought to us for quote-unquote investment terms. So, oh yes, it's a property investment, and of course it's a case of digging down, well, actually, what is the site, what's it being used for? You may call it property investment, it may be classified one particular way in the system, but we need to understand whether it is a retail outlet or whether it's going to be used for example, chemical storage, as we saw for a warehouse recently. And then within those, with the sector briefings that we talked about, we've got key controls and applicable legislation checklists. So for each SIC code, we have a list of things that we would look for does the customer comply with this piece of legislation? If the customer has this process in operation, do they have this control? Do they have this control? So down to quite a granular level, we've got a repeatable process that means that we can treat any two transactions at the same sort of risk materiality. How do we monitor that? I've talked a little bit about the system, but essentially what the system allows us to do is see summary MI on what's going through. It's helpful for a couple of different reasons, but one, of course, is that we can see what's the SIC code breakdown of what we're looking at, and actually thinking about it in fairly rough terms, what's the risk breakdown, therefore, of the activities within those SIC codes, and where are we apportioning our time. We can also split it down by our internal businesses, so the commercial business, or the mid-markets business, or the major corporates business, and we also get geographic splits as well. So we can just use this to get a feel for what's going through the book. So thinking about a couple of case studies that we've worked on. The first one was a customer who was looking to buy a former light industrial factory. We were supplied with former or previously commissioned environmental reports. We knew that the site had some hotspot contamination on it, but we'd also got a site survey that had a drainage report, and we knew that there were some serious issues with the drainage on site, primarily under the car park. And we were talking to the customer about their plans for developing the asset. He was going to purchase it now, and then probably 2 years down the line was looking to build out quite significantly over that car park area. But funding was pretty tight. He was coming to us asking for a fairly strong loan to value on that asset, and offering that and very little else by way of security. So we entered into a discussion with him. We said, look, we don't see anywhere in the projections costs to deal with the drainage. We don't necessarily see reasonable projections to deal with remediation of the hotspot contamination. We fundamentally don't think this is the right asset for you. We talked to him, we'd looked to understand what he was trying to get from an asset. And in the end, we basically turned around and said, we don't think this is the asset that you need. And we helped him find a more suitable asset very locally that didn't have the environmental issues. And it wasn't that we weren't willing to deal with the issues, it was just we could very easily foresee a situation in which he was going to get in over his head with remediating that asset and not focusing on his core business. But on the other hand, I thought, we can work reasonably to manage costs. Another customer was looking to purchase a fairly heavy industrial site, simply for use as storage, so relatively low environmental liability for future use. But we knew from the information we had in front of us that, big long list of nasties with the site, including asbestos and again contamination hotspots. Also, we introduced the customer to one of our panel consultants who went out, did a documentation review on the information we had on the site, but also did some site visits, and came up with a detailed costed remediation plan for the customer. The customer then approached the vendor of the asset and said, look, I'm interested, the site meets my needs, but actually I would want some consideration for this. And in the end, actually I think they did quite well, because to be honest, they managed to get full reduction in the purchase price for all of the costed remediation. In reality, they ended up doing a fair bit less than we'd initially thought was necessary. But certainly, we ended up with a happy customer, purchased the asset that was right for them, but made sure that it was remediated appropriately. So I think hopefully that gives you a feel for who we are and what we do. Actually, I'd basically open the floor now, so that if anybody has any questions, I'm more than happy to answer those. Thank you.